I'm going to let this panel introduce themselves. I feel like some people may need no introduction. So we're going to get started with winning strategies for community banks. Take it.
I'm Jim Cramer from CBC.
I'm Chip Mahan, sitting next to Jim Cramer from CDC.
I'm Tom Broughton.
I'm Scott Deeser with First Financial Bankshares in Abilene, Texas. Home of AI right now.
Well, first I'm going to thank Madam Chair, Vice Chairperson for this panel. There you are, which is amazing, and I'm honored, deeply honored to be here with the backbone of America and the people who make things happen, and that you put this together is incredible. It's a reminder that there are people in government who want this unified to go forward, and I thank you. It's terrific. All right, I'm going to start a little age traditional. I'm actually going to ask someone to tell me something good that's happened in their area right now. Just give me 200 words about something that's good.
Well, I can talk about the AI plant. We have the largest AI plant in the world being built in Abilene, Texas by Oracle. And it's amazing. We have 6,000 workers out there. They're spending $500 billion on it. It's amazing. And so Abilene is just booming right now. So
Fantastic.
That's a positive.
You bet it is.
Well, I think in my world, the short-term interest rates coming down is most helpful to the community bank space, because all of us, a positive yield curve is going to help everybody in this room. And we don't have to make another sale. We don't have to do anything. We can just watch our margins go up every day. And so that would be very helpful to us, and it's happening a little bit. We could use more.
Peggy and I moved to Wilmington, North Carolina from Atlanta. And in Wilmington, North Carolina, we're growing like a weed. And most of my people in a town of 125,000 are highly upset that there's a 3-light delay at the corner of College.
There you go.
Yeah, that's it.
Well, okay, not stable coin at the local university.
No, sir.
Okay, fair enough, to be sure. All right, so I thought that Vice Chairperson raised an incredible point, and so did the Treasury Secretary, which is that government is right now is a threat to their business, that your business is being held hostage. And I thought there's a lot of good points about the government maybe suffocating, but I want to know, what do you think, and I want it to be a little more of a conversation rather than just a one-on-one. Did I ask you? What are the biggest impediments to growth in your area for a small business person and for a small bank?
I say interest rate and regulation. I mean,
No question, regulation, and especially in rural areas, we've got to have sizing. When we went over 10 billion, and we did that during the pandemic because we grew $4 billion during the pandemic because we stayed open. And the deposits that moved over, all of a sudden we were 10 billion. I did not plan to be 10 billion. We were not prepared to be 10 billion, but all of a sudden the regulators expected us to act like a big bank. And I will tell you, it wasn't easy. Just in debit card transactions, we lost $18 billion a year. And so, and then all the people we had to hire, all the things we had to do, those of you that have not gone over it, take time and be prepared, because it is very costly.
No, I want to tell before Chip starts, Chip is the largest small business administration lender in the country, so I don't want to call you a small bank, because you are a large bank that happens to be located in Wilmington. How's that?
That is correct.
So what do you think about the impediments? Because in some ways, I think that you have been able to transcend by being a bank that is a technology bank, been able to transcend some of the things that have suffocated our country and our banks because of the technology you use.
Well, fundamentally, we reverse engineered this whole thing. Because if you think about my friends at the FDIC down the street, right? So we applied to charter this bank in 2007. like Tom, I had started 2 other community banks in Lexington and Louisville, Kentucky, and we got them approved like almost overnight. So we basically hit for the cycle on this one. So making loans to veterinarians in all 50 states. So no core deposits, so we're going to pay up for deposits. All of our loans are out of area, and it's concentrated in veterinarians. But you have to unpack the business of our business, right? So if you think about an SBA loan, see if you can follow this bouncing ball. It's $1 million loan, $750,000 guaranteed by the U.S. government. Package that, sell it in an active secondary market, put 75 grand in your pocket. The SBA allows you to sell down to 10%. So if I'm making a loan to a veterinarian and she is 750 credit score, 221 debt service coverage ratio, I can sell 150 of the 250 at par to any bank in the country. So that leaves me with $100,000. I made 75 on the first trade, get a 1% servicing fee on the 750, so that's 7.5 points on the 100 you got left. And you put all that in your pipe and smoke it, and you basically end up with a 35% return on capital. So that's what we did in the very early days. And
Now
then
you
if
have
could
40 verticals now. How do you find the eye of the tiger in 40 verticals?
Yeah, I mean, that's a really, really good question. So in the early days, it was very difficult to get information from the SBA. So under the Freedom of Information Act, we said, don't be a dumbass. Let's figure out who can pay their loans back, right? So of the 1,100 industries, we started going one by one by one. And in order to help the guys in the credit department, we said we are going to find someone who has actually run one of those businesses to advise the guys that are at the door of the vault. So we moved from veterinarians to pharmacists to chicken farmers. That's a whole nother long story. And it's worked out pretty well.
Yeah. All right, Scott, I want to go back to something you said, which is really important. We basically have 2 economies right now. We've got an economy that I think, I'm not going to use the word desperate, but must have rates go lower, must, in order to be able to be creative, in order to be able to grow, because right now they're too high. But then you talked about the notion of Oracle coming in. That's the second economy, and I like that economy, and it doesn't put people out of business, it creates businesses. But is that sustainable? Is the sustainable meaning, can it do what we talked about earlier, which is then create 200 small businesses around it? Or is it just one and done? Because we know when we're done with the data center, 6 people operate a data center. But I would like to think that we do have that an effect that makes it so that whole area does benefit.
Well, they came to Abilene because we have the wind farms, and so green energy. But they've had to, that plant will use more than the whole city does. So you got to look at, you got to look at that. So they're building, there's lots of energy going in. They're building their own gas plant for energy. They're doing a lot of things like that. So you're going to see all those area businesses, but think about what it will do for technology, for us to be able to hire. We're going to be a technology area. For us to be able to hire better technology people to come to Abilene because they've got a whole fraternity there. And all the different businesses that will go with this, I think it's really a watershed that's going to hit us and help grow Abilene.
Well, I'm glad. I mean, other than Nucor, the great steel company, people are reluctant to build, or have been reluctant to build, in areas like some of the parts of Texas that you're talking about. And it's a shame because they don't. How do you get good schools? How do you get? I was in Harrisburg, Kentucky, to see what Apple and Corning are doing, and they've created a town that is just going to be one of the great towns in Kentucky because of all the different businesses that come from it. Tom, you are in the fastest growing area of the country, and also the area of the country that I think is the biggest reshoring area. Now, we hear about reshoring quite a bit. Is it dross? Is it political? Or is there reshoring in your area?
There is reshoring, but it's very difficult to make things in the United States.
Yes,
You need an infrastructure of a lot of part suppliers that just have all disappeared from our country, and I appreciate the effort, and I think we can over time, but it's not going to be overnight, I don't think, to bring back manufacturing back to the U.S. I mean, we talk about putting tariffs on furniture. Our area of Alabama, where North Alabama, has a fair amount of furniture manufacturing that's all disappeared and gone overseas. So they're making all the furniture overseas now, you know, the nice stuff.
Right,
Or in Europe, but nice stuff's in Europe.
I think there's a lot of nostalgia by the president for High Point, but that's not where anyone makes even upholstery anymore.
It used to be not
Was
that way.
king.
Yeah, right.
It's king. Wasn't that great?
That was,
Wish we could think of a way other than punitive. Maybe I don't want to have the government do more incentives because we don't want the government, I think, that much involved. But to get the schools to focus on trades and then get the government to focus on the schools, is that a way to do it? And I know that that's a neophyte's way to do it, and I'm with professionals. But where does it start that we can reshore successfully and not just from punitive behavior?
Yeah, I'll jump in the state. We're headquartered in Alabama, in Birmingham, and you know our governor. We have a very strong community college system that is emphasizing the old-fashioned trade schools now. They are building them. They're building them in partnership with manufacturers. Aircraft manufacturer in Mobile is sponsoring a trade school down in Baldwin County, Alabama. So there are a lot of opportunities for new trades, and we do need to, college is not for everybody.
No, that's great. I mean, Tim Cook's from Mobile, and when I was doing some work on his biography, I was shocked that every business had left Mobile. There was nothing left from when he grew up there. Other than nostalgia, I had nothing to talk about. Now, I'm conscious, vice chairperson right now is thinking, what are they doing? They're just they're too far-ranging discussion. So let's talk about
Jim, I want to go back to education because
Sure,
this is something we don't have enough good bankers. There, if you're out in the market looking for bankers, you can't find the level that you need, and it's all about education. So I was the catalyst to start the Excellence in Banking program at Tech, which is about 6 years old. And it was bankers coming in with the academics and saying, this is what we need to train. And so the curriculum is what we want, and it's 100% hire rate out of that program. We have not had one student not be hired. And not only are they hired, but they're hired normally a year before they're out. They know where they're going because they're in an internship program, and it's just an amazing program that they hit the bank and they're ready to work.
See, we need to tell these stories. So these are stories that aren't told. We know what kinds of stories are told. Now, maybe you could say that I'm a cockeyed optimist and I want to hear just only constructive things. Or maybe I want to hear empirical, realistic things. And yours empirical and realistic and I believe can be replicated in other parts of the country. But we have to have the fortitude to realize that it's not done overnight, but it can be done. You just described it.
And the other industries are seeing the success of this. Now, insurance is going in with Tech, doing the same thing. Real estate is going in with Tech, doing a similar program because they want people ready to go to work and not what professors want to teach, but what we need taught.
Well, let's talk about bankers and finding the right banker, because all of you have been passionate about finding the right people, because if you can find the best bankers in your area, then you'll be able to grow better than everyone else. Is it an opportunity when a Fifth Third merges with Comerica to get bankers? Or is that just something where they become stronger in your communities?
It's absolutely a huge opportunity for many people. I mean,
Especially community banks.
Every time there's a merger, many times we hire people, the teams we hire are people that have built and sold a community bank to a larger regional bank. And, for one reason or another, some of them don't like being in that system. And so they find our culture more to their liking and more entrepreneurial. So I think, all of us profit from hiring people from, larger banks. And the larger banks become, the more the community banks, we all consider ourselves community banks, right? Not regional.
No, we're not
regional, but we're a series of
community
we're
banks.
11 Service First is 11 community banks.
But Chip, do you regard yourself as a community national bank?
I do. We're in all 50 states.
Right.
But you're a community bank.
Absolutely. Absolutely.
And where do you
That's what I
find
love.
your people? You basically have a campus. You have people that who need to be both technology oriented and business oriented. Hard to find?
Yeah, we have spent about $150+ million on our campus in Wilmington, North Carolina. And I have lunch every other week with all the new hires. And typically they say to me, I tried 4 times. I tried 8 times to become part of what your bank is. If you treat folks the way you want to be treated, they want to work for you. And we come to work too, so we started that in very early days. So if you want to work at our bank, you need to show up.
Okay, do you find, any of you find that it's difficult in a world where in a firm or an upstart, a Klarna, the buy now, pay later folks want so much of your business? A Robinhood will be speaking later. They want your business. Can they get it?
I think they cause problems and some more, you know, the people like Cabbage that we'd have a loan to a.
They wrote that one off.
Yeah, well, that's good. We'd have a loan to a small business. We had a $100,000 line of credit. We tell them, look, we can't loan any more money. You need to do this, this, and this. So the next thing we know, we find out that some lender like that has loaned them another $50,000 at a rate of 35% interest. And so the business fails. And of course, they're a general creditor just like we are, and they cause the failure. So I think those are lenders are more, I don't know, you disagree?
No, today, even, I see it especially in the mortgage market. These younger group, they were never taught financial, how to financially go through. They're not teaching that in high school today. And so they don't know that. So they really want to sit down with somebody. Yeah, it's easier to do it on the computer, but they want to talk through it with somebody and really know what they're doing. And that's where we have the advantage in banks, is sitting down and walking through that contract with them, helping them make good decisions, because the computer's not going to do that in that type of transaction. They need to know what to do and how to do it, and they want to do it right. And they learn a lot from it.
But at the same time, Chip, I think your customers, some of them want the merchant cash advances. That's a good business for you, and they think it's a good business for them. How's that going?
I think they're charlatan lenders, and I can't stand them.
All right, I'm glad you said that, because I know that that's the word they use in your campus, and I was hoping you'd use that word right here.
Yeah, I want to take them out, which is what we do.
Can you? Because they are I'd say they're toxic. They're a poison to small business.
So we have partnered with a new company in the Silicon Valley, right? And so I watched a demo the other day where one of our lending officers is talking to a lady that owns a grease trap company. And this agent that they created called Sarah is listening to this conversation. And she has borrowed money from one of these charlatan lenders. So we now have the ability with OCR technology to go in there and create on the fly an automated credit memo. So on the first pass, it's 0.73. On the second pass, when you get rid of the 40% loan and you actually do some global add backs, you get to 150 debt service coverage ratio. So we can make that loan. Then we talk to the agent live who's watching all of this and say, create a commitment letter. Then I look at it and say, no, it's too long, cut it in half, instantly. So that is, I think, where this business is ultimately going.
All right, that's good. It's smart. Any of you using, I'm going out to, by reference, going out to Salesforce next week for Dreamforce. Their big push this year is going to be for Agentics. Is anyone using Agentics, and how are you doing to prevent fraud prevention with Agentics?
We're not.
We're not using it yet.
We're using it the way that I just described.
Right. I mean, it works for you.
Yeah.
Yeah, I don't know. I mean, I'm concerned that you can hack them. And CrowdStrike's concerned, and Palo Alto's concerned. So if they're concerned, I'm concerned too. At the same time, I think that all of us want to benefit from the use of technology to get that efficiency ratio down. And if there's something that you can share that you've been doing, I know, Chip, you're the king of this in a lot of ways, but some of the let's say of a brick and mortar, what do you have to offer that you've been finding that is good about technology that is making so you get the efficiency ratio down?
Well, we're using AI in our phone center, and it's amazing. The bot is so smart, and frankly, people will choose him over, they get their choice. You get a person or you get the bot. And the bot's name is Finn, F-F-I-N. But I was at the phone center 3 days ago and sat down and listened to all the calls. And our whole deal is get the customer, get them taken care of right there, and get their answer done. And that saves us time, it saves them time, everybody's happier. That's efficiency ratio there. But Finn is just like a person. You can't tell that you're not talking to a person. And these three ladies that are programming him are putting all the personal comments in there, all the things that we do for customer service first, they're putting it in there. And I'm like, this is great. But, it's amazing. Plus, voice recognition, where we do voice recognition. It's a software we use that immediately when they call in, we know it's them. And we also can tell that it's not AI calling in, it's them. And so you don't have all the verification, you don't all the stuff. We sign people up, they're ready to go. And it was so cool. The guy answering the phone that I was listening to literally knew exactly who it was, that was the person, and he could start giving them information. Another thing, to be efficient for them and for us, and the more people we sign up on voice recognition, the faster things go and the better service we get.
I'll tell you, one of the big three, I won't mention their name, took out their cell phone at a cocktail party I went to recently. He said, "Do you know that we will in 2 years have voice recognition? It's right here. I think that maybe we should go to Abilene for it, not New York City. You may have a better handle on things."
It's wonderful.
I do want to talk about what's going on in terms of, let's start with you, but you talk about one bank, 8 regions concept, but everybody seems to want to have decentralized bankers on the ground in their different territories. At the same time, you want to have central on some aspects. How do you figure out what should be decentralized and what needs and what can go back to where to have an asset light and then come back to headquarters?
At one point, we had 12 separately chartered banks. Some were state, some were, national banks. We had a little bit of everything. That doesn't work, And so we centralized, we put them all together, but everybody still wanted their turf. And so we kept their turf for 2 reasons. One, to make them feel better. And all backroom came in, and it was all centralized, which the efficiency was huge at that. But what we did is we have 8 regions today. Each of those regions look like an independent bank. They have a board, they have a president, and they can make their own decisions up into a certain amount, of course. And what it does is put that decision-making process closer to the customer. We look at what does the customer want. They want quick decisions. A quick yes or a quick no is much better than a long no or a long yes. And so we do that. And then these boards are made up of the movers and shakers of that community, the businessmen and women in that community.
These are the non-legal boards that you.
They are advisory board members, but we treat them, they are insured and everything else just like a board member because they sit on loan committees. And let me tell you, that is why our loans portfolio is so strong. If they don't approve it, it doesn't come up the ladder. But they know who to loan to, they know the people, they know the economy, and each of those regions has a separate identity. They look like the community they serve. And so that's what's cool about that board is it keeps it focused on that community like that community.
And Tom, you've got a regional CEO model that I thought was brilliant.
Very close to what Scott is talking about. We have 12 regions, counting our correspondent division. We have a chief credit officer in each of these regions. We have a regional CEO, and they can make decisions. Now, we do have a fairly sizable credit staff in Birmingham, as you might imagine, and we have centralized operations, but not call centers. We do not have a call center because we're primarily a commercial and correspondent bank. Our correspondent has a centralized because we clear for about 200 correspondent banks at the Fed every day. But what I think, we also have a board, and we treat them like they're legal. We call them non-legal directors. And in my first life, my cousin and I chartered some de novo banks, and we had a board, and we had a charters, and we had a controller, and everything. It was very, and then we finally have gotten people away from that system. And for years, when you couldn't start a new bank, which has been most of the last 20 years, we've been going to people and saying, look, don't start your own bank. Just join us, and we'll be your back office. You don't want to fool with a back office. If you're a good commercial banker, you're not good at that kind of thing. So that very, very similar system.
Now, can I just say, Chip, before you, I want you to address this, and you've got your own view of this, but you do talk about in some of your literature that you want lenders to sit down and see the customer to see if they have, and I've mentioned this before, the eye of the tiger. Now, that's something very, very local, but at the same time, you've got a very tough central division that makes it so that your default rate is ridiculously low.
We have about 170 lenders, and it is required that they sit down with a customer face-to-face. And what you're really trying to determine when things go bump in the night, because if it's an SBA loan, by definition, you don't have capital. So rates go up 350 basis points, you have a challenge. So a quick example of that would be hurricane in Live Oak, Florida. We have a chicken farmer there, the Ortega family. They lost multiple chicken houses, no insurance in Florida. So we then helped them extend payments. They sold all their cattle. They sold a 1963 Corvette. The Cuban community around them, they're Cuban American, put those houses back in a matter of weeks. But we picked them, and they have the eye of the tiger. And each lending officer has to basically prove that they have a relationship. When the going gets tough, you're gonna be victorious.
I love stories like that. When I was a Tallahassee Democrat, I only covered crime in Live Oak. I think maybe Live Oak's moved to a better situation when I lived down there. So we talked at the beginning for Vice Chairperson talked about, and Secretary Besson talked about what the administration is doing very quickly to try to change things. What would you, Secretary Besson, we didn't get a chance to speak to him directly, but what are some of the things that he should be thinking about beyond what he may have said today? I know the Vice Chairperson will relate what you say here.
Well, it was such a positive interview, and he said so many positive things that really I'm coming out of this just, I didn't come to talk, I came to learn. And I learned a lot. And where we're going is the right direction. We've got to get the regulations off of these smaller banks because they cannot take the amount of regulation. He talked about loan servicing. We quit loan servicing years ago because of regulations. You know what? That wasn't good for the customer, wasn't good for the banking industry. And so, those are things that we got to think about and get that stuff off so that we can go back and do business and serve our customers the way we need to be serving them. And it's all in sizing too. You can't expect a $10 billion bank to look like a $100 billion bank. We're not. And so we got to go back and put that in place. And I will tell you, the fabric of this company is on our rural community banks. And let me tell you, they're taking the brunt of this, and I am scared to death one of these days we'll wake up and we won't have them, and that's a real problem. The diversity in this industry and the number of banks in this industry are so important because it diversifies that risk. And so, we've got to keep what we got. We got to get de novos. We got to keep going. And we need to stand up for ourselves. And it was great hearing. I love Mickey, and I know, I tell you, she couldn't be at a better place for us. And you talk about somebody that knows banking and knows what she's talking about and tells the truth. And Vicente said so many things that are so true too. So we're headed the right direction.
Well, the de novo banks, they don't have a higher default rate than any other bank. And so why is it so hard to start a de novo bank? And I mean, I'm very selfish because we serve de novo banks in our correspondent division, so that's very selfish on my part. But, when 1985, when I was starting our first bank, it was really pretty straightforward. I mean, you remember how easy it was?
It was.
I mean, and I know there's a group in a small town in North Alabama. Somebody told me yesterday that they're trying to raise $28 million. That's what the regulators want them to raise, and that's a lot of capital and a little.
$28 million to start?
To start.
Jeez.
I think it's the state of Alabama, I think, is requiring that amount of capital. I don't know to be for sure, but in any event, our people, they're not going to loan money to a body shop. I mean, our people are trying to hit home runs. I'll be honest about it. We hire people in our private banking department, and then they turn into want to be home run hitters. so everybody wants to, swing for the fences. So, we need de novo banks to loan money to, the body shop down the street, that kind of thing. I think I'm kind of passionate about it, sorry.
Yeah, just here's another quick story. So on that, so we got our charter on May the 12th, 2008.
Nice time to get started.
Yeah, and
Call
you
it-
know better
you
than what happened.
I'd say you got 7 more months before the bottom.
So we've come a long way. I got a call from the FDIC in March of '09 and said, I want you in my office tomorrow. We had raised $11 million worth of capital to start this bank, and I took the guy running the bank with me. And she said, Mr. Mahan, I want you to sell or liquidate this bank. And we had $150 million worth of commitments to veterinarians. And I said, ma'am, you have to do what you have to do, and we have to do what we have to do. And then my president got in the car with me and said, hey, Mahan, on a 1 to 10, how'd that meeting go? What are you talking about, right? It didn't go so well. Yesterday, I had my Fed exit interview. Lovely time. And I have told my, no, I mean, I enjoy it because they see everything with all these other banks. And I tell my folks really clearly, like, the regulators are undefeated, untied, and unscored upon. And you treat them as someone that can actually help you operate your business because of what they see. And I believe that in my heart of hearts.
Really?
I do.
Okay. Let me give you the flip side of why there are fewer banks. A bunch of us didn't feel, from Summit, New Jersey, a bunch of us, all ELK members, didn't feel that we had a good bank in town. There was no bank that would support the Little League, no bank that would support the Christmas. But look, I was the DARE officer. I mean, I was always the guy who had to go raise the money. So you knock on the door and you go to Wells, and well, we're not a bank. We're just, we're there. But you know what? We also wanted the cash out. We wanted the bid, and we got the bid. And then it went back to the way it was before we had a bank. I mean, it is true that some of us get into community banking because we want to flip it. That is, in some ways, the enemy to community banking, isn't it?
When I grew up in a small town, family-run bank in South Alabama, and people in town, important people, the lawyers, the doctors, the dentists, they wanted to be on the board of the bank. They wanted to buy stock and be on the board of the bank. Right. And everybody out here, that doesn't exist anymore. The people in the community do not want to own stock in the local bank. For one thing, I remember, a few years ago, I was a meeting with the chair of the FDIC at the time, and I said, the average bank in Alabama is going to make a 7% return on equity this year. And I said, that's just not very good. Directors don't care about return on equity. They just want to be on the bank board and know what's going on. So mine kind of care. Mine really want to make a lot of money. So,
well, I mean, when you have 5,000% return as soon as you start, that's a lot of money.
So it's hard to have a community bank. We're not what I'm talking about. I'm not. But for people that run a smaller community bank, if credit unions are exempt from taxation, why can't there be some threshold of size for smaller banks, minority banks, rural banks, some criteria where you have a lower dividend, a better dividend and a better tax policy for those people to keep community banks alive, because we're going to lose them.
No, that's very true.
They're all my customers, so I don't want to lose my customers.
No, the president is concerned, I think like many people in this room, about the housing industry, about how to get more homes. Look, I think that if you lower interest rates and you stop your tightening of the mortgage bonds, I think that we do a little better. But what I'm focused on is, what is the real way to be able to get more homes built? I think that in each of your communities where you live, it's a pro-development, maybe not as much tight zoning, but who's the enemy to not having enough homes? And that we need, that we're building the same number of homes as we did when we had half the people in this country. And I shouldn't use the word enemy, that's too subjective, but why isn't it happening?
It is in Texas. We have a lack of housing in Texas, and so Texas is just booming on house building, and you just can't build enough. And, I don't see really any negatives. I see a lot of things going on, and we're loaning a lot of money to home builders, and it's and we need it, and we need that housing, and because you can't bring them if you don't have some place to house them.
Right.
And so it's very important. Now, other economies may be different.
Yeah, but now your region, Tom, you've got, well, your region, some must be much harder than others to build homes.
Well, for one thing, the elephant in the room is if you didn't have, illegal workers, we couldn't build a house.
Okay.
I mean, okay, nobody wants to talk about that. But
No, I know.
We need a guest worker program.
Yes, we
I
do.
mean, I think President Bush had a program. We need a program to have those people. I know some of them, they own businesses, they pay taxes. They've been in business 20 years. They're illegal, their wife's illegal, their three kids are legal. So, I mean, so if everybody says, one of our senators from Alabama, so those people need to leave, like, what are you going to do? You're going to kick those people out of our country. So,
Although I did, my executive producers here, Regina Gilgan, I've got my list of third rail things I'm not supposed to talk about.
okay.
Yeah.
Got it.
You just got him spanked.
Got it.
Look, I can go to crypto. That itself is third rail to some degree. But go ahead. I'm sorry, because you have a national view of things, and I know that you're lending to people like the cash pay veterinarians, but to lend to small home builders who are not Lennar and not Toll and not Pulte and not D.H. Horton is not easy. Those are not necessarily good credits.
Yeah, we're not really in that business.
Right, that is just a cyclical, tough business that you don't want to be in, absolutely. Now, I do want to just talk a little bit about tech, and we did have a panel previously that talked about crypto and stablecoin and blockchain. My personal experience, I have a lot of businesses in Mexico, and the Mexican government, which, believe it or not, the Mexican IRS is far better and more efficient than the federal IRS because they're really good at what they do, that it's just a flag. It's a flag to be able to make it so that no one knows who you are. And so therefore, if you want to get in trouble, you set up an account like the gentleman we were talking about before. Now, in our country, it may be different, and maybe because of who I don't know, I got flagged because I got flagged, but what do you think about crypto, and what do you think about the need to do business in Ethereum, to do business in a currency that people are mostly buying because they think it's going to appreciate, not because they want to use it for commerce?
Well, I'll tell you what I think about crypto. That is where all our fraud is going, is through crypto.
Right.
We can't facilitate fraud. We don't want to facilitate fraud, but every minute of every day, every customer that I have defrauded pays through crypto. And that's got to be stopped. They have got to be under the same standards we are, and it's a real problem out there. Fraud is at an epidemic today.
Look, anonymous wealth is the enemy of your bank.
No question.
Well, we have to find a way to police. I believe in it. And I have a lot of Ethereum, whatever, but I know that it's the way to hide.
When you have a little 90-year-old lady putting her money in a crypto ATM to send it because she's got defrauded, because they know if she comes to us, we'll stop it. But she goes to the crypto.
Right.
And so something's got to happen there.
I agree with you.
I believe in blockchain. I believe in all we've heard today, that's coming and it's good. But I will tell you, they got to be under the same standards.
You agree? Because you're...
Drop the mic.
All right, now there's something that the Treasury Secretary said that bothered me. He talked about something that he regarded as quaint, and I think it's something that we can make not quaint again. I started mine at Western Savings in Philadelphia, a Christmas club, because my mom and dad said, this is what you do, and you get a passbook. And it was quite exciting. It was really exciting. Then I got my Macy's credit card. That was really exciting. How do we get people, I don't want to just talk credit and loans, but how do we get people to save in this country? How do we get Gen Z people to believe in the country enough that they do not start by saying, you know what, we're never going to be as wealthy as our parents? Because our generation, I like to think we're a similar generation, we all knew we were going to be wealthier than our parents. Why? Because that was God-given. That was the way our country was. How do we get people to believe to put some money away and stop it with the triple venti cappuccino with skim wet for $9.50 at Starbucks?
Put money in Live Oak Bank. We play top of the market on money market accounts.
You know what? That's a bet, but compound is pretty darn good. But we do have to try to figure out how people can have, that we can inspire.
They're looking for a shortcut, Jim.
I know.
They're going to buy some crypto, or they're going
No, they go to
But
DraftKings,
they're
14
gonna open a
parlay.
Robinhood account, and they're gonna
I know.
leverage it, and so, they think coming to a bank like one of ours and opening a money market account and saving money every month, they just, they don't, but they'll figure it out,
Will
I
they?
believe those people will turn into us someday.
Jim, it's
They'll be baby
education.
boomers someday.
Education.
It's all education, but we got to get back into high schools and start teaching financial responsibility.
Yes, I
And
totally.
how to build that. Because you know what? I tell my youngins, when they're coming into the company, I do new employee orientation. I do a session in that, and I tell them, look at our profit sharing, look at the 401k, because that's what you got, and you're going to need to put as much in there. Because you know what? Social Security's broke. What you're putting in today is going out to somebody else. It's not sitting there for you. And if you think it's going to be there to take you to, through retirement, it's not. So, novel thought. You got to take care of yourself. So start putting it back. And so, it's those type of lessons that we need to get down to that generation.
Well, this $1,000 Trump account, this could help. I think look, I want government smaller. I want our budget to be more balanced. This does not help that. But do you think that we can get people motivated with that $1,000? Do you think that can be explained to people what it could mean when you're born and you have $1,000?
It's a start.
Isn't it?
It's a start.
I thought it was smart. I mean, it was an intelligent, creative way. I wish we had more money as a government. I was glad to hear that the deficit would minuscule down. But you think it's an intelligent way to get people started?
I think it's ownership. If people have ownership, we want all our key bankers to be stockholders, because we want them to think just like I do, make the best decisions for the shareholders every day. And ownership is the greatest, home ownership. We need home ownership in America. We need all those things that ownership gives you pride and it sense of purpose. So I think the Trump account, I think, is a
Jim, 25% of our mortgage loans go to low-income areas. And we go into those low-income areas. We had a course this week that they went in. How do you prepare to buy a house? Just all,
right.
And we're going through, a lot of times we'll go through the churches. And the churches will have an event. We'll go serve dinner at the church and do, in these low-income areas, how do you buy a house? How do you get ready to buy a house? And then, but that's good business for us. And, I always tell the story when I do one of these, if you're going to rent, you're paying somebody else to own a house. If we can get you into a house and you use that same money for rent, you're buying your house. And there's a big difference.
Oh, very much so.
Yeah, so our chief technology officer told me to go see our guys that write code in NC State University in Raleigh the other day, and he said, you need to really sit down with this one really young guy he's a 10Xer. He's the best of the best. And I asked the young man, I said, we're trying to grow this bank 15% year over year, both EPS and the capital account. And historically, we took the bank public in 2015. It was an $800 million bank with $50 million of capital. Today, we're a $15 billion bank with $1.2 billion of capital. So I asked the guy, I said, so do you have $100,000? And he said, no, sir. I said, well, let's assume that you could go to your mom and dad and borrow $100,000. And you're 24 and I'm 70. That's a few years back. I said, if we could grow this business 15% year over year, by the time I got to the car, he had texted me, 100,000 turns into 41 million in that period of time. So the point there is financial education. If you understand what these things can do for you, pay attention. Pay attention.
Yeah, I think that in some ways we can go to what, Scott, you've done, lessons on service with Horst Schultz. I thought this was really important because if you have service, you'll know how to talk. You'll know how to present to each person what is service, correct?
That's right. Horst, those of you that don't know Horst Schultz, he's the founder of Ritz-Carlton. We hired Horst 6 years ago to upgrade our customer service first. We've had a customer service first program for about 15 years before that. So we're into it 20 years. I wanted our service to be consistent. I wanted it to be excellent in every branch, and so everybody's trained. Horst comes and trains them. And, to have the top customer service person in the world come and train about customer service, if you haven't read his book, it's Excellence Wins. Go get it, read it. It's an easy read, but it tells a story. He helped us design 21 non-negotiables, just like Ritz-Carlton. And, well, Ritz had 20. We have 21. And we live by those. And what it is etiquette, what you say, how you treat the customer, how you treat each other. And it's an amazing, and every morning we have lineup. Every department in our bank across the whole footprint has lineup on one of those non-negotiables. And that way, every 21 days you're going through them. It's not the flavor of the month club. It is what we eat, sleep, and breathe and believe. And it's changed our whole, it has helped us grow tremendously. Luckily, he was in before the pandemic. That's one of the reasons we grew $4 billion during the pandemic, is that those customers came and they did not leave. And they're not going to leave when you give them that kind of service.
Now, Tom, you talk about disciplined growth, strong client relationships. Are the strong client relationships, do they start in a similar service mode?
We ask all of our bankers to touch their top 20 clients every month. I think, gosh, that's a lot. Well, that's just one a day, one a business
Right.
day. So we stay really close to the customer. And that's, if you're close to your customer, if you have a bad service, they'll let it go. They won't. They've got a good relationship, and we're their bank, and they're happy with us. So, staying close to the customer, I think, is the most important thing. And, it drives me crazy when I talk to a customer and I said, when's the last time you heard from your banker? And I might not even remember who the banker is. And they say, well, it's been a few months. That just sets me off. I'm going straight to my
I got to
phone.
open accounts with you guys. I never hear from my banker, and I got trying to run some businesses, and I don't even know their names.
I have a signature card for you this afternoon.
I like that. That's what we need. Now, Chip, you got the national footprint, but you still have been able to make it so that you have, I'm sure with the veterinarians, you understood their concerns. I know that you also were in the family of someone with a horse veterinarian, but my experience with somebody like a veterinarian, they don't need you because they're cash business. How do you get their business?
So we're in 40 verticals in the SBA business, and we go to about 350 trade shows a year.
Oh, great.
And then
That's
when you
so
do that,
smart.
every business is small.
smart.
I mean, whether you're going to the National Funeral Directors Association
Right.
meeting or the NCPA, the pharmacist meeting, all these businesses are small.
That is so brilliant. You figured out the verticals and where they are,
Yeah.
as opposed to them hoping they come to you.
That's
That doesn't
it.
happen. Now, I'm conscious that we have, in the time of, I really do want to deal with some of the things that are the previous administration versus this administration and what can be done. The notion of risk-based versus capital, very important, right? I mean, we do risk-based. If all of you know and understand risk, I run a bank. I think I'm much more likely to get a loan from risk-based than someone who's just got some sort of table. True? I mean, is it looking better? Do you think that the regulators will frown on it?
I tell our regulators, they say, well, you need to do stress testing. I said, oh, we've done it. We had COVID, and then we had March of 2023. So those aren't the two best stress tests in my career. I've been doing this over 50 years, and I guess not full-time, but over 50. So I think we've all been down that road, haven't we? We've seen it.
Well, I have failed for 17 straight years to talk any regulator into what we affectionately call the Mahan ratio, because we are a $15 billion bank with $4 billion worth of government guaranteed loans. But that doesn't work. It's still 10%, so I can't get that exculpated from the risk-based capital ratio.
Well, I don't know which of the regulators in particular, because you have about 10 regulators that you have to deal with over and over and over again. We know how wrong that is.
I failed every time. They don't buy any of it. But it's fine.
But you're respectful.
Yeah.
You know that does get you somewhere.
Yeah.
To be respectful gets you somewhere. Do you think that we are any closer to the idea that perhaps there should be one or two regulators you have to talk to? Because I just don't know how much time you must spend each quarter just not helping people.
It's a lot.
It is a lot.
They did, basically, they never leave. Yeah, we finish one exam, the next exam starts. And you know, and somebody made the comment about that being a positive, that you do learn, and the regulators are a positive to us in the fact that they keep you down the straight and narrow road.
But I have to believe that many of them are still, look, they're directed. I think these people are in your community to some degree.
You're kind of touching the third rail here for us, Jim.
Yeah.
But let me say this.
I didn't even know I was on the second rail.
I want a choice because I have been told by, several people that, the current administration wants just OCC to be the only regulator.
Correct.
And I think that is not, because over time, I have found that the OCC can be politicized. And sometimes it's in my favor and sometimes it's not. So I think having a choice of regulators is in our best interest. Is that?
Oh, I don't think there's any question. I changed regulators. And there was a real reason I did, and it was politics. And so I'm at the Fed and very happy.
There you go. All right, when the secretary talks about too small to succeed, does that resonate?
It's hard.
It's hard.
And again, I go back, the smaller banks, it's harder. We've got to pull some of the regulations that have come down, rolled down the hill to them, needs to be pulled back because they don't need to be under the same regulations the bigger banks are.
If they have a simple business model and they're not trying to do anything esoteric, but the problem is some of these small banks will go buy 30-year CMO securities. They don't even know what they are. I
No.
sure as hell don't know what they are. And then all of a sudden their balance sheet's upside down because they did, things that were less than smart.
And I want to say something to that because this is one of the courses I teach is a high-performance banking course. And when you look at banks, publicly traded banks, and you could look at family-owned banks, and it's very similar. You've got lower-performing banks, you've got mediocre banks, but when you get out here in the high-performance banks, there are very few. Well, if we can take these banks, and this is what I want to do in my retirement years, is work on this and teach this course. If we can take those banks and move them to high-performing banks, we have a lot more vibrant banking system in this country, and we're a lot stronger. And so that is a real goal for me. Those banks that buy the wrong bonds, it's all in education, and let's get that education out. We, at our bank, I'm a firm believer in education. We've sent more students through Swigsby than any other bank in the country. And we do that I want my people as educated as they can be. The smarter we are, the better we are.
My argument is I think most regulators think capital assets is the primary, metric that they want to see.
Right.
To me, I think that's all wrong. I think it's profitability. If you have a strong, if you have a 15% return on equity, you're making money and you've got some problems, you can handle them. But, if you get in we saw banks that had a good capital base when they got into 08 and they really had problems and the banks, some failed, some had to go away. So I think profitability is something that the regulators don't really care much about.
Well, that's ridiculous.
That's
Profitability is your businesses. I want to look first at I want to see some profitable growth. All three of you have profitable growth. All three of your businesses look like businesses that I want to invest in. I do not want to invest in a bank where I have no idea what they own because I know, therefore, they have no idea what they own.
But a little bit back to your business, right? So last week or 2 weeks ago, NVIDIA writes a check for $100 billion. So they traded, 50 times earnings?
No, 27 times next year's earnings.
And Apple's at
18 times 27 earnings. Apple's at 32 times earnings.
And Amazon trades at?
And infinite. 52 this year.
And the S&P's at 23?
Correct.
And we're at 9. And if you think about this business, it's a tough business, right? So leverage 10 to 1, you're buying into a blind pool of credit risk. You got a high fixed cost business, branches. We'll be a little bit different on this, but it's like, where is that going, right? And when you see these agents, I talked to our call center guy yesterday, right? So how's it going? Great. right? What, we up? Yeah, we're up. We're up 10 or 15% year over year. Let me ask you a question. Are the questions the same, to Scott's point? They're the same. Will you send me the questions? 205 questions. So the average bank answers the phone in 6 minutes. We're at 2 minutes. Can it be 1 second, right? If there's that much efficiency and these agents can handle the calls that you talked about, Scott. But then where does that go, right? So everybody in this audience has a money market account at a bank, and that bank is paying you 50 bips. I'll pay 350. Why are you at 50? Because you opened that checking account when you were a kid like you did and whatever savings loan you talked about?
That's true.
So will an agent someday be able to move that? And all of a sudden, we got to reprice the entire book of money market? It is, you know, again, basketball. You shoot 65%, you're in the Hall of Fame. Baseball, 400, you're in the Hall of Fame. In our business, if you don't bat about 99 plus, she's fussy. Right. I mean, we got to go figure that out.
Well,
Right?
you know, I look at your bank. The 9. This is a historically low PE multiple for your bank. So I go to try to research your bank with Ben Stoto, who's my research director, and I have to say, there's not enough. There's not enough research because every piece of research is unbelievable, and I've got my file about what you've accomplished, and you know I got something in it, but it tends just to be the public filings because where are the articles that I need? Where are the articles that tell me a lot? And there's 2 firms. Thank heavens for this Fortune magazine, Inside America's Top Small Business Bank, because you have 2 companies that write on you, and because you had a bad loan or something, they have a neutral. So to some degree, it's trying to get the story out. And thank you, Madam Vice Chair, for giving us a chance to tell the story out, because all of your banks, I find, I mean, look, I like NVIDIA and I like Jensen. I mean, look, I got to remember in the end, I entertain and educate, but NVIDIA was a good one that I caught. But the only reason that worked is, you see, I named my dog NVIDIA, then America bought it. So maybe I got to name my dog Live Oak.
Wow, that would be good. That would be good.
But there is a problem. There's a dearth of information about all your you are all unbelievable banks with tremendous records. I did not, I knew Encino. I did not know your connection with Encino other than I heard, well, it's connected to a bank. You have generated more venture capital wealth than any banker. I didn't know it until I went to work on reverse. You talk about reverse vertical because I knew Encino. But these are stories that they don't get told. And I struggle over how to get more coverage for you guys and get more stories about you. And if I wish that maybe offline I can try to help, but there's just not enough coverage because all of your banks they're so much better than the average stock. And I wouldn't have known them if you haven't put this together. I'm pointing to the vice chair. It is.
Drop the mic
why do you
again.
not have more coverage? Why do you think you don't have more coverage? What is the impediment?
We trade 200,000 shares a day. Nobody really cares.
It's liquidity.
Yeah. Yes.
Bank stocks are close to their, they're not far off our all-time lows.
No.
Right. March of 2023.
And I would tell you, we're performing better than a lot of businesses. And we're kind of the stepchild right now.
I think that's true. I mean, when I look at the non-performers, they're remarkably low. I don't want that to discourage the Fed from cutting because I think that's a different thing between the way the good discipline that you have in terms of your lending versus what we need to see, which is more lending, and that's part of the government's fault, and that's part of the curve, which the part that they could control. But I do think that when I look at your situation, if you get your multiples up and get more capital to you, our country would be a lot stronger. And I struggle over how we can all do that. We need to tell the story of the bankers in this room I know the liquidity is really only lends itself to the retail investor, but the retail investor is coming back in a very aggressive way. And we have to steer them not just to NVIDIA, but to something like your banks. I don't know you don't have the coverage right now.
No, we don't. No.
Well, look, I know we got to end on soon. I started with what's going well, and I'm not going to end on anything other than constructive. Tell me one thing the government could do right now after this meeting that would make things better. And I know I got to limit you to a very short period of time because I'm moving this thing over. One thing the government could do. Wow.
I can't think of anything.
I mean, less regulation. I've already said what I
Right.
think they can do to help community
I
banks.
just wish we knew, like, which entity's got to look different, change its style.
I think they need to hear what we heard this morning. And that's the most positive I've heard in any
I
banking.
thought so too. Funny you say that. I thought so too. Just positive.
It's just positive. We needed positive news. We needed, this country to have positive news, and we have positive news, and things can get better. And all of us want our banks to be better. We want the banking system to be better. And so let's talk about it.
Well, I'm from a different color state than you guys, and it doesn't seem to affect anything.
I'm more optimistic about community banking than I've ever
Right.
been.
Me too.
Oh, that's
I really am.
terrific.
And we could compete with the big banks. We absolutely can. The millennials have gone to the GSIB banks, and the lower end mass market retailers gone to fintechs. But there's a whole world of people left out there for us. Affluent.
Couldn't agree more. I got to get in one of your verticals. I'm in the alcohol business away from this job. I don't know if you're in that one, but
We are.
Oh, then we'll talk after. Anyway, I want to thank everyone for listening to our ramblings, because I hope they made sense to you, and to gentlemen, just fabulous, fabulous, uplifting, constructive thinking, and Vice Chairwoman, thank you so much for what you did.
Thank you.
Good to know you, Jim. All the best. See you.